Marathon Digital will expand its hash rate or mining speed by 600% with record purchases of Bitcoin miners. The Las Vegas-based miner expects to have almost 200,000 operational miners generating over 23 exahashes by early 2023. Joining us now to discuss is Marathon Digital Holdings CEO Fred Thiel. Hello there, Fred. Thanks for joining us there. So Marathon has made multiple large purchases of miners throughout the year. And in October, the company secured a $100 million revolving line of credit with Silvergate to fund Bitcoin mining operations and to acquire new equipment, which I see you're doing that right now. So what is the philosophy of or underlying assumptions behind this strategy?
Well, we believe, as do many others, that the global hash rate is going to grow by a significant amount next year. If you look at BitUda's numbers, essentially it's a 100% increase from the end of this year to the end of next year. So as a Bitcoin miner, if you're going to be dependent on revenues from your mining, essentially, if the Bitcoin global hash rate doubles, you're going to have half as many Bitcoin that you're going to win. Unless you grow your hash rate compared to your competitors. So this is part of us growing market share. It's part of us, really growing and trying to be the leading miner in the industry and focused on doing what we can to really make sure that we secure the blockchain and secure North America's role in the blockchain going forward.
And so just how profitable is Bitcoin mining right now for Marathon Digital?
Essentially, our average cost to mine a Bitcoin, energy, hosting, the depreciation around the hosting, if you would, all in is about $6,200. So if you figure Bitcoin at $51,000, you can see the profitability there. Key is obviously the sooner you can deploy more miners, the sooner you can take advantage of your growth in hash rate. And I think we're going to see a substantial explosion in the hash rate between now and the next halvening. And unless dynamics change and miners start selling the coins that they're mining, we're going to continue to see a nice uptick in the price of Bitcoin. And hopefully going into the next halvening, the increase in Bitcoin will match essentially the global hash rate growth. But we'll have to see that. Nothing's definite in that regard. The only thing we can control is the growth of our own hash rate.
Right. And so what is Marathon doing with the Bitcoin it's accumulating? Are you selling, using it as collateral?
So we use part of it as collateral when we need to borrow money. We currently don't have anything outstanding on the $100 million line with Silvergate. We're also doing some yield generation activities around lending out the Bitcoin. We're going to be doing a number of other things which don't involve us essentially selling the Bitcoin or in any way sort of losing control of it, if you would. But we'll do some options, some hedging, some other things that'll generate a nice yield on the Bitcoin.
I recently saw a chart showing, Bitcoin miner unspent supply. It's reaching a record high in terms of miners keeping their Bitcoin. Do you see this as a trend among miners, and will that reduce overall selling pressure on Bitcoin going forward?
Well, I think if you look at 900 Bitcoin made per day, awarded per day, and the vast majority of the large miners are holding their Bitcoin, then there's no new supply going into the marketplace. What is going to drive selling from miners is going to be their capital needs to be able to continue to grow, continue to buy miners, and continue to fund their growth operations. They're either going to have to tap equity markets, tap credit markets, or sell their Bitcoin. And depending on what happens with the price of Bitcoin, depending on what happens with the price in the equity markets, we'll have to see kind of how most of the miners decide to go forward. We did a large capital raise through a convertible debt offering, bond offering that we did this fall in November. We raised a little over $700 million through that at very attractive terms. So we were essentially well capitalized to make this large purchase that we did. Other miners aren't really in that situation, and they're going to have to go to market to raise money. So they may be forced to sell Bitcoin to continue to grow.
Fred, what are some of your top predictions for 2022?
I think 2022 is going to be a great year for crypto overall. There will be a regulatory framework put forward. I know Senator Lummis has got some ideas and thoughts about what she wants to do, but I also know that what the SEC is looking to do is really try and bring anybody operating in the sort of crypto lending, accepting crypto deposits, crypto exchanges, bring those companies into the existing regulatory frameworks that exist. When that happens, You'll build more consumer confidence in these companies, which will be a boon really to the DeFi business and exchanges. I think you're going to see a number of layer 2 applications come out on the Bitcoin blockchain having to do with things like identity and essentially staking your reputation with Bitcoin. So imagine a world, and this is something Michael Saylor has spoken about recently, where if you wanted to be a Twitter authority, you had to stake a certain amount of Bitcoin, maybe 100,000 Satoshis or $40, $50 essentially. And anybody who wanted to reach out to you or contact you may also have to have a certain amount of Bitcoin staked. That is a way to really prevent spam, for example. It's a great way to prevent and make it much harder for people to create fake accounts and do things. So I think we're going to start seeing Bitcoin and crypto being used as a way to validate identities. We're going to start seeing layer 2 blockchain projects around personal identity, KYC, healthcare, some really exciting things. And that's going to drive more adoption of Bitcoin. One thing that we're going to see executed in 2022, I think also is the development of this project that FIS and NYDIG announced earlier this year, where essentially FIS, who is a large back office systems provider to banks across the US and internationally, is going to roll out crypto custody and trading to potentially up to 300 million bank accounts in the US. And so while that doesn't necessarily mean that millions of Bitcoin will be leaving the market, as soon as you get 10, 20 million people buying 100,000 Satoshis, half a Bitcoin, something like that, it starts sucking up liquidity from the marketplace. And if the miners aren't selling and the consumers are buying, then Bitcoin only has one direction to go, which is up.